Thank you for coming.
No, pleasure.
We're going to start off with Waterfall. Everyone keeps asking about it. Why should I buy and spend 10 million, 20 million, but not own the property? And as much as we try to explain, some people buy into the concept. Hence, there's so many 10 and 20 and 30 and so on million properties being sold all the time. But for everyone's benefits, do you own the land?
Yes and no. South Africa leasehold is a new concept. Up until Waterfall, the banks wouldn't accept leasehold as secure enough for them to give you a bond. But Waterfall is the first development where all the banks have, even SA Home Loans has recently stepped in and done their first bond there. So if the banks are happy with the security that it offers, I think that in itself should give you peace of mind that the banks aren't easily satisfied with security. Yeah. So if they're happy, I don't think the average person should have any concerns. But it's the same principle. The lease gets endorsed on the title deed, and the bond gets endorsed on the lease. So from a security perspective, it's registered in the deeds office, the same as a normal bond on a freehold property.
So your name is on the title deed, because that's what people often wonder about.
The lease is endorsed on the title deed, and your name is notarially endorsed on the lease. So for proof purposes, South African deeds office system is still highly regarded worldwide, including the notarial lease session process for security.
Okay. And is there anything that says in the contracts that the banks have reviewed that the lease cannot be cancelled? Because again, if we think of it as a normal landlord and tenant situation, the landlord can, in certain eventualities, cancel the tenancy. So this is a concern.
Yes, there's quite a lot of provisions in the Waterfall lease for that. The banks also, I think it took them a couple of years to get that lease agreement finalized with the banks to the point where the banks would accept it. So there's a lot of provisions that if, for instance, the lessee, the owner, becomes insolvent or there's arrears on the bond, the bank has actually got the right to step in and take over.
Same way as any other property.
Same as they would. So they don't have to then go and foreclose and attach, but there are provisions in the lease to protect the bank for that. And
okay.
The lease also has provisions similar to that if the seller gets into trouble and he needs to sell it under duress, that they won't charge that extra 3.5% for the lease extension when you sell. So that you actually have provisions to cover the owner if he gets into financial difficulty as well.
How is that done? Because I'm sure that will be very helpful for you, Joel.
We've had a situation recently like that.
I think maybe you must pull your mic a little bit closer.
Yeah. We had a situation recently like that where the client was, after he sold, there was going to be about 700,000 Rand that he would have still had to owe to the bank and to everything. And Waterfall then said they will bypass certain amounts and write it off so that at least the bank's not taking such a knock. And in certain instances, I've heard as well that what the bank will do is they might even say to the agent, okay, but then you also need to drop your commission. They didn't do that with us, luckily. I think because they already see that we only, the commission's obviously standard 5%. Waterfall
is 4%.
1%,
yeah.
So we get 4%. So I think the bank looked at that and they luckily didn't make us do that, but yeah, so we've seen it, we've actually done it. Yeah.
Okay.
No, it was the first one that we tested the theory out.
Yes.
You just have to prove that the seller is really in distress. So they want the figures to show that there is a shortfall and it's got to sign an acknowledgement of debt for the bank. If you can prove that it is a proper distress sale, then they'll...
And it doesn't apply if someone bought and is now selling it below the purchase price. So they still have to prove further than that.
It's not whether you make a profit or a loss on the property. It's whether there is financial distress that the bank is...
Provable.
Provable, yeah.
And then, what if after 99 years they don't renew? They say, can they say, I'm not renewing anymore, thank you very much?
The initial leases on the Waterfall equestrian side, you had the option whether you want to extend. So if you sold after 10, 15 years and you didn't want to extend, the buyer was happy to take over 85 years that's left, you didn't need to. But then it worked on a sliding scale, so the later you left it, the higher the percentage you had to pay.
Right.
But now on the country estate side, village side, they made it compulsory. So automatically, if you sell, you have to extend. But now it's only a 3.5%, 3%
Yeah.
plus VAT extension fee.
Okay.
And there's no time limit as to how many times that can be done.
But what I'm asking, what is the concern of buyers is, can Waterfall, year 99 is reached, let's say I buy and I live to be 200, and I want to do my extension.
Interesting question. I think there's an automatic extension, meaning that you have to pay the 3.5 and extend when you sell.
Yeah.
But I think there is a provision, I can double check, that you can elect to extend it at any point in time. So you have to if you sell, but if you want to at any point in time, you can.
But can the landlord, being Waterfall, say, no, I'm not allowing you to extend?
They don't have
cannot.
the discretion, no, as long as you pay the extension
Okay.
fee.
So to just confirm is that the documentation and the contracts are such that Waterfall does not have the right to say no if you are doing what you're supposed to be doing according to the
Lease,
contract.
Yeah.
A question I get asked a lot from buyers is, and I'm not even to make a joke as in, okay, I'll live till 200 years, but they eventually die, their kids get the property, maybe the grandkids get the property, and let's say the property is still in the family in 99 years, then what happens? Does Waterfall take it away? So no, it doesn't. What happens after those 99 years is you pay the lease renewal fee of the 3% plus VAT. And then sometimes buyers are like, okay, but kind of like, what if the kids or the grandkids or great-grandkids don't have that money? So what I then suggest is take that 3% plus VAT now, put it in a money market account, and obviously it's growing as time's growing. So in 99 years' time, the money is there to renew. So that is quite a question we get very often, and I think some people will laugh about it and be like, really, who cares about what happens in 99 years? But for some people, it's a very serious thing. They want to know what's going to happen with their family wealth. So
Yeah, I suppose if you put the property into a trust as part of your estate planning, that could become a practical
yeah,
point, because a trust could or should exist for more than the 99 years. But if you're saving the transfer duty initially of 13%,
yeah,
as you say, if you take 3% of the purchase price when
Yeah.
you buy instead of paying 13% transfer duty,
yeah,
invest it, and hopefully it keeps semi-track with
yeah, yeah.
the value. Hopefully not, because we
Interest.
trust the property values will increase faster. But
Yeah, because that's the whole point. I think buyers often forget that you would be paying a normal transfer duty if you are buying any other property. And even when they buy developer stock in other areas that are not a 99-year lease, what often a buyer has the misconception that they're not paying anything, but in actual fact there's a VAT that the developer has built into the selling price. So there is even more. There's a 15% cost to them purchasing developer stock.
yeah.
It's just structured differently.
Yeah, it's interesting when you see in the advertising that no transfer costs. That's normally from the developer, because the cost and the transfer duty, or the VAT in that case, is included in the price.
Yeah,
Waterfall, I see some are advertising as no transfer duty,
yeah,
which, but I think for most people, if you realize just the benefit cash flow wise, if you're buying a property and having to pay 13% on top of the transfer fees, bond registration fees, valuation fees, etc., I think there's lots of benefits to only pay the 3% at the end when you sell and you've built up the capital and made
Yes.
the profit on the property, rather than paying it up front. That's a big benefit, actually.
yeah. No, very much so. And in terms of when the 3.5% is payable, it's obviously payable when you sell. But what happens if, like you were speaking about, children inheriting? Let's say, first of all, the property is in a private person's name. Obviously, if it is a trust or a company, pretty much it's indefinite at 99 years, realistically.
Yeah.
But if it's in a private person's capacity, and that person is to pass on, and it goes to the spouse or the children, is it always the same situation?
Same as with a normal transfer. If you inherit a property in terms of a will, there's no transfer duty. On the lease, it works the same in Waterfall. So if you're leaving the property to your spouse or to your children in your estate, there's no extension fee payable.
Okay.
You can do the cession to that beneficiary without paying the 3%.
And then, but it will not renew to another 99 years. It will basically
Yes.
be the remainder.
Remainder, yes.
Okay. That's always good to know. Yeah.
No.
Yeah, I always say to buyers, it's actually a benefit buying in Waterfall because you're saving so much money. You're not paying like you say, the 13%, 10 to 13%. So it's a benefit to buy in Waterfall. You just pay the lawyer's
Technically,
fees.
you've got your 10% deposit.
Yes.
Or you can buy 10%
More. Yes. And then what are the costs for a buyer in Waterfall? Like obviously they're now not paying all of that. What is the buyer responsible for?
From the buyer perspective, compared to a normal transfer, there's no transfer duty obviously now.
Yes.
And the fees are the same. The conveyancing fees and the FIC and deeds office fees and the compliance
Yes.
costs are all exactly the same as for a normal transfer.
But that's the small portion, obviously.
That's about probably 0.7, 0.8% of the purchase price, whereas transfer duty is 13%.
Yeah.
So
That's a big.
I mean, for the benefit of a buyer, what are the costs that they will always have to consider? Conveyancer?
transfer cost is broken down into transfer fees and transfer duty.
Yeah.
So the fees is about a 0.7, 0.8%, and then the transfer duty on the sliding scale, first million exempt, and then goes up to 13% on the sliding scale. So
Does it stop at 13%?
At the moment, yes, but that
Okay.
changes with the budget every year. That's why I don't even know the figures anymore, because it
Okay.
changes every year.
Okay.
But the fees are set by the Law Society. Probably about once a year there's a small change in it.
Okay.
But it's also on a sliding scale. So for the smaller properties, it goes up to about 0.8, 0.9%
Okay.
if you're buying under $1 million. But in Waterfall prices, it averages at about 0.7%
0.7.
of the purchase price. Yeah.
Okay.
I
And
always
what
say
else?
1%, just to be
Yeah,
on the
then you
safe
definitely
side.
cover it. Yeah, that's the fee portion, but then there is still the FIC compliance fee and the deeds office levy and etc.
Yeah.
So there are 1% you'll be safe.
And then if we switch it around and obviously if it's a bond, then there's bond cost. That's
Yes,
obviously something else. But I'm talking cash sales, and obviously there are quite a few of those. Now, for the seller, what is involved for the seller when he sells? Obviously your electric and gas and all the compliance certificates, but besides for that.
Yeah, and there's
But that's not obvious, actually. People don't know that.
Okay.
Yeah,
Yeah.
with Waterfall having piped gas available and most of the houses having gas, there is the COC for the gas.
Yes.
But that's not expensive. It's about 1,500.
If there's no
rand.
issues.
If there's no issues,
Yes.
yes.
Yeah.
And interesting, you only need a compliance certificate if you have piped gas and the pipe is longer than 2 meters. If it's a gas bottle that you've connected for
Yes.
your gas braai or your stove, then you don't need a compliance certificate.
And how long are they valid for? Let's just touch on that as well.
2 years, the same as the electrical
Okay.
ones. Yeah.
And the electrical compliance certificate, very much the same price, again, unless there's any issues. If there's issues in the house, it can cost 30 grand, depending on what needs to
What
be
the
fixed.
issues are.
Yeah. But
Oh.
it's normally about 1,000, 1,500.
A lot of the older estates, like Alami estates and so forth, there's a lot of maintenance and a lot of the initial secure
Yeah.
estates. But Waterfall being quite new, I haven't seen too many houses where there's
Lots of problems.
issues. Yeah. And then for the seller, the lease extension fee is payable to the lessor, the MIAS, the trust that owns the property.
Yes.
For that extension of the lease, there's a 12,500 rand fee payable to the attorneys for the
Okay.
extension of the lease. But that's
Who are
payable by the
representing
seller.
Waterfall.
Yes. Plus deeds office, probably about a 15,000 rand total cost if you look at all the deeds office fees and
Okay.
things included. And if there's a bond on the property, there's bond cancellation fees for the
Okay.
seller.
And then in terms of Waterfall, what they need to pay Waterfall, and we've touched on the estate agents commission.
Yes, yeah, so there's no fee, but we've also found some people, recently we had one in Bellowfields where the seller was very upset that she doesn't have the funds to pay. Where must she get 3.5% up front? And we explained you don't need to pay up front. We give undertakings to Waterfall. So from your proceeds on registration, we'll deduct it and pay it over. It's not that you have to pay it up front.
Yeah.
And the same for water, with Waterfall changing over to Joburg Water council accounts actually now, not just water. The sellers would need to start paying in advance for the rates clearance certificate as on a normal transfer.
Yeah, that's new.
So that's the one change that's coming in now. It's delayed a few things, but again, we can make plans and do proceed advance for the seller if needs be.
Do you think it's better with this new change that's coming in, or?
It will simplify things a bit, because in the past we'd have to get Waterfall management to do the apportionment on the rates, and because the bill used to stay in the Waterfall's lessor's name. So, and also for proof of residence for people. If you only have one property and it's in Waterfall and you don't have a rates account in your name, it becomes more difficult to get.
Okay.
But the council, the one drawback is that you have to now pay 3 months in advance to get your clearance as a normal transfer.
Okay.
Where in the past we would give Waterfall an undertaking to pay from the proceeds.
Okay.
So from a cash flow point of view, it is a bit of a change for the sellers.
Okay, but that's normal now, like with every other property if it's not in Waterfall. So
Yes, yeah.
I don't really think majority of the people in Waterfall have cash flow issues.
We don't see it often now.
Yeah. Yeah.
But you said, you give undertakings to pay the Waterfall portion. What if the seller doesn't have enough to cover the Waterfall portion and the bank outstanding? Who comes first? I'm assuming the Waterfall portion, and then they have to do an acknowledgement of debt to the bank.
Same as body corporates and all homeowners, you need that clearance certificate in order to register. So even if the bank is foreclosing on a property, they still need rates to be paid. They still need levies to be paid before the bank can get a portion, the remaining portion of the proceeds.
Okay, so seller needs to be aware of, if they're selling, they're paying 3.5%, the lease extension. They're paying the Waterfall legal fee, representation fee of plus minus 15,000. That includes some portion for deeds office. They're paying electricity and gas certification, unless they've already got it. But also to highlight it's valid for 2 years, but provided no
changes done or work done,
no changes done. And because we did have that, an electrical certificate was issued, and afterwards the person changed all the electrical plug points and did not necessarily realize that this invalidated everything they'd done. And they'd also had a gas certificate issued, and they changed the gas stove to a new one. So again, then new one. And other than that, 3 months upfront levy to Waterfall, right?
Waterfall, levy, we can still give the undertaking for the levy portion, so it doesn't need to be paid up front. It's just the council rate clearance that has to be paid up front.
Just the council rate clearance. And that's currently with City of Joburg is 3 months.
3 months, yes. Yeah.
Okay.
The one other point also is if you're looking at the changes, not many people are aware that if you do any alterations on the property that requires amended building plans, technically you need to get as-built plans approved and have a new occupancy certificate issued. And very few people do that. I'd say on 80% of the properties we transfer, you might be aware that there were changes done, but there's no new occupancy certificate.
Okay.
So if you do changes, remember you've got to get the council out with the building inspector and get a new occupancy certificate, technically. If the house burns down, it might become interesting if there were changes and there was no new occupancy certificate, because technically you're not allowed to legally occupy it without a valid occupancy certificate.
So since you say people are not aware, who is meant to enforce this?
Well, council bylaws require that if you do an amendment on the building plan, there's a change, so you need a new certificate. The only people that really would pick up on it is if the bank is aware that you've got a building loan for improvements, and they'll want the building plans, and then they will ask for the revised occupancy certificate.
Right.
Because it impacts their security, because the insurance
Yeah.
will require it. But it is a bit of a gap in the practical
Seems to be, hey?
at the moment.
So if the seller, unaware of what you have just said, sells without an occupancy certificate and he's built a nice extended patio, maybe they've done some other renovations, and the buyer buys it, also unaware, where is the fault? Is it the seller if something happens?
With the seller disclosure document that you sign now, the seller should be aware if he did the alterations legally.
Oh, yes. Now that you're saying it, actually, one of the things on the disclosure, it says, any improvements, whatever it's been done.
But it
with the
doesn't say,
correct
do you have an occupancy
new
certificate?
occupancy certificate.
Yeah.
Oh, that's an interesting question. I think ignorance of the law is no excuse. So if the seller legally should have obtained it,
They
would
must.
technically
They would be in fault.
at fault, yeah.
It's interesting. I mean, and this is now not specific to Waterfall, it's specific to any of the estates. What you find is estates have taken upon themselves to do a bit of policing, because people do all sorts of interesting stuff, on their properties. And some of the estates are very strict. They, they'll go, they inspect houses regularly, and issue letters and penalize and so on, but not all the estates do it. So is there even any responsibility on the estate, or not really?
No, I don't think there's responsibility on the estate, legally speaking, but a lot of the bigger estates, Waterfall has got the studios that, for the initial house build, they will want the occupancy certificate before they...
Yes.
So there's the policing and the enforcement, but if you do amended building plans, it has to be approved by the homeowners
Right.
before it can go to council for approval. So the homeowners should be aware that there's an amendment, and can technically then also, I suppose, request the amended occupancy certificate at all.
And studios comes out when someone's buying,
So, yeah.
and they come and check.
We have had it with studios in Waterfall where they protect the buyer indirectly by saying to the seller, there's amendments
often.
that's not on the plans.
Sometimes that's quite a big thing. It can cost, like the painting of the house is not right. You need to paint the whole house, or your air cons aren't covered. You need to cover the air cons. So that we do see.
It's a very good thing, yes, because otherwise the buyer doesn't necessarily know
Yes.
if they're
yes.
buying something that's not in line.
And also then tries to keep the estate to a
Yes,
certain standard. But now, do they not then pick up if there were any extensions when they come and do that completion certificate? Do they not pick up?
We have had it in Waterfall. Where
There's
they
an
picked it up
extension,
and-
you don't have a new occupancy, but sometimes it's not.
Yes, yeah.
Okay.
Building, I think it's quite regulated in Waterfall that it's not easy to do construction or amendments where you've got builders under the radar.
Okay. Okay.
So it's one of the benefits, I suppose, yes.
Okay.
So again, if we just step outside of Waterfall in general, because I think also each province maybe has different enforcement of all these laws, but just in terms of plans, is it a legal requirement to have approved plans?
There is proposed amendments to the Splumer Act that might bring that in, but it's not
Currently.
legislation. No. So you don't legally have to have, as the seller, supply approved building plans to the purchaser on the sale. If with a declaration you're aware that there were amendments and you don't declare it, there could be a problem.
But isn't it a little bit of a contradiction then? Because the seller, if they're aware of the bylaws that no changes, first of all, that the house could only have an occupancy certificate with approved plans, and thereafter any changes have to also be approved plans and new occupancy certificate, then it transpires legally you have to have it or not.
So with the seller, if he did the changes, he's obviously aware that there's been changes, and legally speaking, he should then obtain the amended certificate. If he doesn't, and he sells without declaring it on the seller's declaration form, I think the purchaser would be able to hold him liable for the cost of having it approved, which is a cost that can be sorted out. The difficulty might be if you've built over a building line or a servitude and you can't get it.
Right.
I think
What happens
you've had
then?
personal experience with that.
Yeah.
in a sale recently. So yeah, the fact is, if this seller did the amendments, I think he would be liable for the cost of having it rectified. If he
Right.
was aware, if he bought the property as is and wasn't aware that the previous owner already did it, it would become more difficult
Okay.
to enforce. But
So what would the suggestion be then to just prevent this, is to just ask for plans?
in an ideal world, yes, all sellers would have approved building plans in their possession, and when the agent lists the property, they'll get a copy of the plans. But unfortunately,
How often
in
does that
reality,
happen?
doesn't.
No. And when do you need plans? I mean, people also don't often understand what that means. When do you need plans to be approved and to go through this whole process? So if you have the house already, what changes require plans?
I think on the different Spluma bylaws for the different city councils, there's also
really?
some require a Wendy house to be on, some don't, for instance. But I think for Waterfall,
Plans for a Wendy house.
some
Okay.
councils require it has to be on your, if it's on concrete plinths and it's
I think I can bet that 99.9% of
Doesn't
sellers
have,
do
no.
not get plans for Wendy houses.
the one protection there is if you do buy with a bond, the banks would often, if the building inspector or the valuer comes out and they see something looks added on, they'll quite often ask for the building plans.
They always, the majority of the time.
Yeah,
and
the banks, yeah.
That can be it might be something to explain to sellers, get it in place. It is a pain, but get it in place before the time. Because if you sell the property and you want registration in 2 months and
Yeah.
the valuer comes out and he picks up that there's a change and they ask for building plans, that could delay the transfer by several months to get plans drawn up,
Yeah,
approved.
that makes sense.
Yeah, I mean, our office took how long? I think something like
And we only
this
got
office.
those plans last month, I
So
think.
what is it, 8-9 months for the plans? And that had already commenced prior.
Yeah, well, Joburg Council at the moment says 6 weeks for plan approval, but
Okay.
like all things, it tends to take
Longer.
Yeah.
a bit longer. Yeah.
Yeah. So, so anything that has a structure, that has a concrete floor structure and cover, or because people talk carports, you know,
Roof.
yeah, just so we know what we're looking for.
Yeah, from my understanding is that if it's got a concrete and it's a permanent installation, if it goes into a building line or a servitude and it's got a concrete footing, it's permanent.
Right. Okay.
Um,
Okay. And if you okay, so if you don't have the plans, then basically it can delay the process. But it cannot be the purchaser saying legally you have to provide the plans as it stands right now.
and the seller is not legally obligated to have to give it to you,
Okay.
but contractually, if the purchaser makes it a condition in the
If
offer
it
to
is on the
purchase,
offer.
then it's a contractual
Okay.
obligation to.
Okay. And is this applicable throughout South Africa or as different provinces? Because I know, for instance, in Johannesburg, no one really asks unless it's the bank that asks or the estate. But Pretoria, it's pretty much a given that there's an expectation for plans.
Yeah, as far as I'm aware, there's no legislation or bylaws in Pretoria that makes it a.
More
The
required.
Alienation of Land Act doesn't require it for a legal enforceable contract, for
Not.
instance.
Okay.
The Consumer Protection Act doesn't have any provisions in for it. So there's no legislation that requires it.
All right. Okay. So,
With the Spluma, the change that is on the cards is that the council, when they issue a rates clearance certificate, is going to double check. Part of the process, not just checking whether your water and electricity and rates is up to date, they're going to check whether your building plans.
that will be a good thing, actually.
What if you
because-
don't have them and you can't get them? No one has them.
In Midrand, we've got lots of properties, plans burned down. The building that it was kept in burned down about, 25 years ago.
But I think that's the standard line, because I've heard about buildings burning down and plans
I
burning
just
down
wanna know
in
for a
every
fact that
municipality.
and plans got moved from Midrand to Joburg when the council was consolidated and plans
Okay.
went missing.
Okay.
So then what do you do?
You've got to have it redrawn. We've got one transfer that we did recently in Fourways that ended up in a huge mess. It's a heritage site. The house is over 100 years old. And obviously the owner doesn't have plans, but
So now that question
So
on the
to get
disclosure
them
is
approved.
finally making sense.
Since,
Yeah.
and just to get the approval from a heritage property, it took months to get the approval before you can even submit the building plans, because there's a clearance required then from
That you haven't made any changes to
the old original.
right. That I think is probably very much applicable in a lot of the Cape properties, right? In terms of heritage.
Yes, there's older properties there. So
Probably it's applicable to Irene here down the
yes,
road.
and also have some.
Yeah. Okay.
That's
Because
interesting.
I heard recently that the Irene farm is now in the process of being sold. So obviously there's been a big outcry of is it going to ruin the whole area? What will it turn into?
Because it is a nice feature, I must say. It's a nice area with.
It's gorgeous, yeah. And I mean, the number of photo shoots that take place there, weddings, children, you know, it's quite a feature of the area, I guess. And it does make you wonder, you know, if the purchaser necessarily sees it that way, especially if they need to make money out of it. So it will be interesting to see.
Yeah, zoning is one way that it'll be protected. You won't probably be able to develop it, but even changing the old original structures
Yeah.
might be sad. Yeah.
Yeah. Or getting rid of the cows.
And tell me something, how much does it cost if you have to draw up new plans? Do you know? I know it's not your line of work.
The last
but-
few that we've done, probably between 15 and 25,000, depending on
And
the
how
size
long
of the
does
house.
that take then? Because that probably also then needs to still go.
The last ones we've had were quite quick. Within 2 weeks, the architects had it. They come and measure.
So if you
with-
really can't find them and you do have the extra bit of money, it might be easier to just go that route.
Yeah. There's one or two companies that seem to specialize in that these days. They don't necessarily do new plans and design stuff, but they're very quick at being able to just measure and
Okay. We
get
must-
plans drawn up for.
But now, is it a given that the sectional title apartments have
No.
plans?
Sectional title is also a different kettle of fish, because the inside structure to the middle of the wall and to the ceiling, that's your unit. Outside is homeowners. So outside aesthetics, the geysers in the roof is the responsibility of the body corporate, not the owner. Building plans is also the body corporate's responsibility.
But is
But
it
as
a
a member
law?
of the body corporate,
Is it legally required that you have plans?
Yeah.
Or that the body corporate has plans?
same requirements. Have
Same.
to have occupancy certificate, and occupancy certificate
We've
depends on
found-
building plans, electrical,
Not.
glass, plumbing. There's like 11 certificates you need to get the occupancy.
We found complexes that don't have, they don't even want to try and help. And then we have to get other
Yeah.
people to.
Pretoria is special with that, because you also have a lot of those
The
duet houses.
that's where I was going with this, because it's opened up a very...
Yeah, and you say to the seller, where's your levy clearance? What levy, what body corporate? That's me and my
Because
neighbour.
it's-
I pay
exactly.
my neighbour down.
And
there's
then
some
what?
challenges there. There is a body corporate which comes into existence by law when the sectional title register is open. So whether the two buyers or owners know that they've got a body corporate or not doesn't change that there is a body corporate. They're the
Even if
members of
it's
the body
one
corporate.
person, because what I was under the impression, and it sounds like I'm wrong, that if an owner subdivides the property into two, which is the case in Pretoria a lot, until they sell half of the section, being the 100% owner, they do not need to do it. But if there's a 50% other ownership, because they're the developer technically, no?
No, I would.
Is
in
that
terms of-
too creative?
As soon as the sectional title register is opened in the deeds office, by law, the body corporate comes into existence. So that body corporate now has to register with CSOS as a. And
Yeah.
You've got to pay the levies, and you've got to prove the funding for the maintenance, etc. All of those requirements kick in by law as soon as the register
Instantly.
is open. So the fact that the two sectional title deeds are held by the same person, it just means there's two members in the body corporate. That's one natural person maybe, but it's still two members of the body corporate.
So how do these people navigate it? Because I don't think...
That's the stuff that keeps conveyancing interesting after 30 years.
Yeah. Because I don't think any of these people, especially, speaking of the Pretoria duet situation, it's just a normal thing.
No, often had to just help the owner that's selling to speak to the neighbour and say, listen, technically we are a body corporate, although here's a letterhead, sign the resolution that I'm allowed, then I've got a levy clearance certificate, because the deeds office requires a levy clearance certificate from the body corporate.
So Canva is your friend, special certificates that you have to work on.
Oh, no.
Right, okay, that's interesting. But then there should be then a body corporate insurance.
Yes, so structural insurance, it is a mess often in the duets, because if it's bonded, the banks would normally pick up on it. But I've had transfers where it's bonded and there's no structural insurance, the body corporate.
Yeah.
No.
Okay. So purchaser beware, pretty much.
Yes, auctions is for me also a different kettle of fish, and much more risky unless you know what you're doing.
Right.
And duets probably needs a bit of homework before you commit to buying a sectional title duet.
Right, okay.
The practical things is like meters, and I pay the neighbour, he gets the bill, the race is in your name and you get the bill, but I'm the owner next door.
Yeah.
If things go wrong, sectional title, the difficulty on small sectional titles is often, remember, you're liable for the debt on water and electricity consumption, for instance. Sectional title, each unit's got its own rates, but water and electricity for a sectional title is normally one supply. So if you two have a duet house sectional title, you can't afford to pay the water and electricity, but you keep using, your water and electricity is going to get cut, and you're going to have to pay the body corporate bill in order to get your water back on. So
But I mean, we do manage a few rental properties, duet setups in Pretoria, and they do get separate bills.
the council of late, the last couple of years,
Yeah.
has started, but originally, going back 10 years, the
Right.
council would say it's one supply, especially if you're subdividing an existing house into a
Yes.
sectional title.
Okay.
The council wouldn't initially give you. Now with prepaid meters, it's become easier. You can get a prepaid sub-meter for
Okay.
the 2
Interesting.
units.
Yeah. Okay, so that's so much for the sectional title. So then the land, is it still jointly owned and each house is individually owned, or is it the land owned by each person in a
On
duet
sectional
set?
title. Yeah, you've got your exclusive use area, so it's the section is the actual house, and the exclusive use area that could be allocated on the sectional title plan becomes your owned part of the property. But then driveways, etc., could still be common area owned
Common
by the body
areas.
corporate, technically. Yeah.
So would that be the same setup, back to Waterfall and the 99-year lease, that does the house, the structure, belong to the lessee being the owner, the buyer of the 99-year lease,
Technically, the improvement, you lease the property, the land, is what the lease is for.
So the lease is for the land.
Initially. So the improvements done on it is done with the permission of the landlord.
Who do they belong
But if
to?
you default after the 99 years, technically that building would be
Not yours.
not yours, yeah.
So you don't-
There's so many protections for it not to happen, but theoretically,
Yeah.
yes.
Yeah, I know there were. I've heard of one case really in Waterfall Equestrian where it took many years to come right on someone defaulting on payments and so on.
They've got provisions that if you default on your levies, etc., and there's certain criteria that if it gets into that situation, that Waterfall could buy the property as a preemptive.
A lot of the
right.
estates have that actually, but I think again, I find it's very difficult to enforce. Midstream has that provision. Also, Steyn City has it, especially when it's selling land, and the expectation is that within a certain time frame the person starts to build. And you often find across the board, not for those specific estates, but everywhere, that people would buy the land with the money they have, wishing or hoping that they will be getting money to build. They don't. So 3, 4, 5 years down the line, they've stopped paying rates and taxes, they stopped paying levy.
And the penalties
are kicking in. So I know there's that provision that the estate can purchase it back. But I personally haven't experienced, I've never seen someone lose or rather be forced to sell their place.
In Waterfall, we had one probably about 7 years ago, where the seller was selling for less than market value and less than
That's
what he
the first
originally
right.
purchased for.
Right, the first, yeah.
Yeah, and Waterfall looked at it, but they didn't eventually exercise it. So they do have the right, if you're selling for less,
To buy.
to buy it first. But
To keep the values.
I think that is the logic, yes, is to keep the values up.
Do- Yeah.
Now, if the property is selling for far under value, there's, I suppose, the benefit of buying it and knowing that it'll pick up, or trusting that it'll pick
Yeah.
up in value again.
Yeah.
But by allowing properties to become derelict and sold for it will impact on the estate. So
Yeah. Okay. And in terms of auctions, you said you have to be very knowledgeable in auctions. Have you done conveyancing?
it's like alienation installment sale agreements. We don't like doing them. I've done probably 20 in the last 30 years, and I think only 5 ever went through. So I have a pet hate
Really?
for installment sale agreements. My personal opinion is if you don't have the money to do the deal now, rather than do it or rent it and take the option to buy.
I've had one
installment sale.
successful one in all my years.
Yes, yeah.
And you did it. So that's one of the 5 that was successful.
Well, it might be one of them, yeah.
Yeah.
Auctions, if you're aware of the fact that the conditions of the auction, if it's a normal auction with a sheriff auction, you're liable for the rates and taxes that are at arrears. And a lot of people I've found put offers in, pay their 10% non-refundable
knowing.
deposit, not knowing that by the time the house is repossessed, there's probably years of rates and taxes unpaid. It's not
Does the
months.
auctioneer have a obligation to disclose all the costs?
They normally in the small print say that it's when you make the offer, the information is there. You've got to do your homework, and
But the information
don't
is
give you-
where? Where can one find that information?
you've got to go to council, but council won't give you the information because it's not your property. If
Yeah.
you ask for, so it's a catch-22. The same for, but I've seen auctions where people buy properties unseen because they're not allowed access. They've looked through the window and made an offer. Then eventually they get access and they're horrified at what's on the inside after the property was repossessed. It's like a repossessed car. People don't look after what's.
Yeah.
Um,
But that one, the buyer was speculative, so it pretty much, follows that they need to take the risk
Risk,
because they
yeah.
probably also offered, tens of times less than market.
People often ask us, is it good to go the auction route? I think it's terrible. I think it does so much damage to the reputation of the property.
yeah, in South Africa, I think in Australia and other countries, auctions
Oh,
as
quite a big
a way of selling is accepted. But for us here, the perception is always
The
an auction
stigma
means
around
it's
it, yeah.
a forced sale.
Yeah.
People don't understand the difference between a forced sale from a
Yes.
sheriff auction and a
Yeah.
Once you've gone that route, it's like the damage has been done.
yeah, you're going to battle to get your price on a normal sale
Yeah.
if you try after
Yeah.
auction, I think. Yeah, so.
And also, even if people do understand that maybe this is not a sheriff sale, they still go to an auction with a specific mindset. And
The fact that you're going on auction means that you're battling to sell your property. I
Yeah.
think that's the perception for.
yeah.
Commercial is slightly different, but for residential,
Oh, is it different commercial?
I think it's more common auctions as a way of disposing a property.
Oh, okay. We haven't done commercial
it's not that
much.
stigma as it is in residential that you're going on auction that you're in
Okay.
difficulty. Yeah.
Interesting.
So the costs at an auction are entirely for the purchaser. Is that so?
It's the main difference is that commission is the 10% normally, and it's payable up front as the deposit, and it's not refundable. So if you don't get your finance, for instance, on a lot of the auctions, the conditions are you still lose your deposit. So you've got to know that I have
You're getting the
or
finance.
I'm getting the finance if you put down the deposit.
So that's the commission for the auctioneer. What else then? Does the purchaser then pay rates and taxes?
All the
Any
more.
debt?
The rates and taxes, yes. So at auction terms, normally you pay the deposit, the commission that the seller would normally pay. You've got to pay the rates and taxes that the seller normally pays, and then you still pay the transfer cost and the transfer duty. That
And if there's any other debt on the property, do you buy it with that debt? Let's say, I don't know if there's an outstanding bond or
the
surety.
bond will
No.
get settled as the.
Okay.
They have their reserved price, so that the bank will only accept the price where they get out enough to cover the.
Ah, right. Okay.
Interesting.
Yeah, that is.
No, we don't deal with that ever.
Stay away.
When people ask us, should we go the auction route, we're always like, no, don't.
But I mean, you said installment sale, and it just shows how popular it is if we've only done one each in how many years. But why would someone choose an installment sale over a normal sale?
Installment sale, you've got a lot of protection built in the Act if you follow the Act. But meaning you can register the deal.
When you say you've got it, it's the seller, right?
The seller and the purchaser, because the seller keeps ownership of the property until they've been paid in full. But you can also, once you've paid 50% of the purchase price, as the purchaser, you can ask for the property to be transferred to you. But then the bank, if the bank is a bondholder, the bondholder has to consent, which they're never going to do. So it's only really practical if the property is unbonded to then. But
isn't that risky? What if it does register and they
there's
can't come up with
so many pitfalls in it. If you make the
Who
installments,
then pays to reverse the transfer?
rectification transfers, court applications, and it's.
No, I would never allow that on mine.
I'd rather
To your
say
sellers,
No,
yeah, to
no.
support, protect your seller.
sign a lease with the option to buy, or
But
do
in
another one.
reality, we hear this, and I mean, it's interesting you say that. We hear this all the time. People will call us and say, I want to rent with an option to buy. What weight does it have? Because in my view, it has no weight. It's
to the
me
benefit
telling
of the
you,
purchaser.
I hope one day I can buy.
would
But
say so.
what else does it mean?
There's no benefit to the seller really, because.
But
it's
even
a
to the
rental.
purchaser, what benefit, or just first right of refusal if someone puts another offer?
The difference between an option and a first right to refusal is basically an option means if you sell it to a third party, I can step in and say, no, I want it first. So I'll offer you the same price as the third party.
So it has to be the same price.
Same price.
Cannot be worse.
It cannot be worse because then you only have the first right of refusal.
Right.
Or the option. But normally for if you do an option, you can agree on the price up front. So I agree that this is the price that I will buy it at if I decide to buy it at.
So again, any benefit to the seller?
Not really, no.
No. And so that's the option, and the first right of refusal means what?
You can't sell to a third party without offering it to me on the same
Like what
terms
Stein
first.
City does.
Yeah.
You hear it a lot more there. Like
Yes.
because they like so hectic with the paperwork.
Yeah.
But that's what we do with the continued marketing
Right.
clauses that I like, because the continued marketing clause keeps the pressure on a buyer that
To
you've
perform.
signed the offer, but you've got to perform, you've got to come up with the money. And from the seller, you're not taking your property off the market while you're waiting to see if the buyer. So I'd often be hesitant to say to a seller, accept the offer and let's see if they get the finance. But if you have that clause in, you've got not much to lose because the property stays on the market as long as the agents keep working it. And that is the first right of refusal.
Yeah, we do that a lot.
But the important thing, I think, to understand for the seller is it does not mean if another purchaser comes along with a higher price and the first purchaser says, okay, no, it's fine, I'll pay you the balance today. The seller cannot say, no, but now you must pay me the higher price.
Then you can't.
You can't create a bidding war.
Oh, yes. So it's got the wording is normally that an offer, the competing offer that's in the opinion of the seller a better offer. That's the criteria. So once that is there, that could be a better price, no suspensive conditions, or just a quicker occupation date, for argument's sake. But if you present that to the first purchaser, he's got to waive that right and accept the current offer. So he's got to fulfill these suspensive conditions in the current offer. You can't enforce a higher price on him
Yes.
as a result. Yes.
Or cancel the existing deal,
Yes,
because often what the perception by a seller is that I'll just take another offer and I'll just tell the first person, no.
Yes, especially if a sale is subject to the sale of an existing property for the purchaser. That is a condition that is practically often it happens. You don't want to sell your property until you know you can get something you can't sell. So it's catch-22. But if you have the continued marketing clause in it, from a seller's perspective.
Yeah. The only challenge that I've seen with the subject to selling another property is if the purchaser is not really putting much effort in selling that other property. And how does the seller protect themselves? Because what it can be is, I'm buying your house in Pretoria and I say it's subject to selling my house in Cape Town, and you have no clue, am I even trying to sell it? Am I putting a very high price? Yes. Am I just buying time?
Do you have the right agent?
Do I have the right agent?
agent?
Yeah, that's true. That's true. So what would the protection be for the seller in that sense, or is it just that's where the continued marketing has to kick in?
We protect the seller
Yeah.
because think about it. What we've always done in a situation like that is we always say to the seller, to the buyer, please give us your property. And if it is, say, let's say it's in Cape Town and we don't work there, then we try and find someone who we can at least refer it to, so we have a little bit of control over what's happening.
Yes.
So that's what I think it's us that actually tries to protect the seller, and putting that clause in helps as well.
And if in that case, if the purchaser is also serious, then you're also actually working in his interest to get that deal. Yeah.
Yeah, I think good questions to ask would probably be, have you had the property on the market? How long has it been on the market? What was the price? Because if it hasn't sold, you can see it's wrong, priced wrongly, or...
Yeah.
But the new Property Practitioners Act, I think, has got a provision in that you can't make a sole mandate a condition for the sale of that suspensive property. In the past, that used to be the common...
Yeah, you can't
way of doing
force
it.
anyone to do it, but you can
In the old days, that was,
negotiate.
for me, it was a good point, because you'd say...
Oh, was it enforced legally?
You could make it a condition that it's got to be a sole mandate to the selling agent. So you taking the offer, and if it's subject to a sale of another property, they've got to give you a sole mandate.
Oh, I didn't know
And you
that.
can then use that to make sure you
We've
appoint
never-
a joint
yeah.
agent or another agent that you're comfortable in the pricing. But now with the new act, that's become problematic.
Because you're forcing and taking
Yeah.
the clients right away.
Yeah.
We always push on that, though.
Yeah, simply to, but again, it's one thing to say, we're going to do it in your interest. It's a different thing to sneak it into which you obviously, like you said, you might get people that will do it, but that's where you need to watch.
The rental agreements in the past, you used to be able to have a clause in that said the agent has the sole mandate, but now it's not
Yes.
allowed anymore.
Yeah.
And some agents are still doing it.
Yeah.
No, we do see. But, and again, it's the same as like the occupancy certificate and building plans. Theoretically, yes, but practically speaking, 80% of people aren't aware of it.
And that's the thing. I mean, how many people, how much can you know unless you want to go and do a law degree, specifically in property? Because also just having a law degree doesn't mean you learn everything about...
In the days when I still studied, there was no conveyancing course. You finished law and then you started conveyancing as purely practical. Then the Law Society eventually brought out a...
Okay.
I don't know in today's interesting adversity if there's a conveyancing subject.
Okay. There should be.
It'll be until now.
But I mean, there was even a conversation we had with Anton the other day where he spoke about the wetlands. And that still bothers me a lot because I heard that you can, unknowingly buy a whole stand that's pretty much wetland predominant, and it's your problem because you didn't check.
The floodlines is relatively easy to see, but whether it's a protected wetland area, especially in Midrand, it's not that easy. The council website these days, the new, what they call it, CGS or something, the website with the maps from Joburg Council, I actually played around on it yesterday. There's a lot of information on there, and you can see the wetland areas.
Okay, even in estates.
Even in estates.
Okay.
Yes,
Is it our duty to tell the buyer to go and do their homework on that?
we had one case where an agent in Midrand sold a property where there's a proposed road, not proclaimed yet, but it's a proposed road.
That famous, infamous road, or another one?
The one that comes from Steyn City across...
Yes. What is it called again?
I think the K57.
K56.
56.
Okay.
It's east-west parallel to Main Road, basically, in that section. And the purchaser rented the property from the agent in the past, And when he did the lease, he gave them a copy of the plans with the proposed road on, but he didn't get them to initial it or sign it as part of the lease. 3 years later, the tenant bought the property from the agent, and they just signed an OTP because you've been there for 3 years. Obviously, you know exactly.
You've done
what the
enough
property-
inspecting of the property.
2 years later, the purchaser, now being the new owner, came back and said, I wasn't aware of the road, you didn't disclose it. And he managed to reduce the price by 40%, ended up in the High Court. And
That's
so from the agent not getting an initial on a page that he actually did give them, was part of the lease,
But was there a requirement to disclose the proposed road? Yes, okay.
as an agent, you're an expert in
Yes.
the properties in the area. That's what you hold yourself out to be to them.
Yes.
So for him to then rely as a purchaser on your expertise to be aware of what's happening in the area, and if there's a road coming over a part, it actually clipped about a third of the property. Once it's proclaimed, you'll lose a third of the property.
But was this not also maybe a claim because the previous owner had been paid out by council?
To find out whether it's been proclaimed and paid out is an absolute nightmare. But in this case, no, it hadn't been paid out yet. It's been the proclamation and the payments doesn't happen at the same
And
time.
if it
And there's
does
no
get-
it's not recorded on the title deeds.
It's not.
It's not.
But
So
if
the fact
this
that it's
new
been paid out
buyer-
is not recorded on the title deed.
Wow.
And if the new buyer gets paid out now,
It was part of the arguments in court that there will still be a benefit because yes, he's going
There
to
will
lose
be
a
paid
part
out.
of the property, but the value is then market value. It's not.
But how does one? So let's say now in this case you say, it was the people were actually aware, but if the person is not aware, is it still whose responsibility, or rather, can you not find it on the title deed? Does it not? Does the deeds office not also keep track of?
For proposed roads, it's not recorded
Not for
on
proposed.
the title deed. Once it's proclaimed, it should appear on the title deeds. But if you do
Okay.
a deed search on that property at that point in time, you won't know that.
You
it's,
won't.
Yeah.
And okay, so let's touch on the servitudes, because that's one thing you can see on
Yes,
the title deed. Yes, that's so exciting. What does this mean for the purchaser when there's a servitude?
You get different servitudes. Some are a right of access, so it might be for your neighbour to drive over your property to get to his property.
That's in a panhandle situation.
Yes, lots of plots and farms that's still applicable. In estates, you don't see it often. And then there's council and service servitudes, so it's for Eskom or for council for services running stormwater or
Okay.
over the property. That's normally on the boundaries. It's not through a property. But you've got to, that's not necessarily obtainable in just the title deed. You've got to go to the Surveyor General's office, which is available online, to get a LG diagram that shows you the servitudes.
Okay. So is it
council.
not always available in the deeds?
Council servitudes are always it's part of the township establishment. They specify
Okay.
where the servitudes are for council services.
Okay. Okay. All right. And that's
But
it.
if you really want to check it all, you've got to get an LG diagram from the Surveyor General's office to see
What you're buying.
buying. Yeah.
Okay. So pretty much the buyer does need to do a bit of research if they want to be 100% certain what they're buying.
but otherwise they're just going to blame the seller and the agent and say, you guys didn't tell me.
But
Yeah.
luckily, the contracts always state you buy the property as is with existing servitudes as recorded on the title deed. And so it puts the onus a bit on the purchaser that
To do some research.
would research if they are.
Okay.
Okay.
The seller doesn't have to disclose the servitudes in terms of the seller disclosure form. It's not one of the...
Yeah, it's not. That's so. As a conveyancer, what are you expected to look out for before you say I'm ready to lodge?
fulfillment of all the terms on the contract.
Yeah.
And then all the clearances that are required by the deeds office, probably in short. But practically it comes down to the terms of the contract. So any special clauses in the contract has to be fulfilled. If it is building plans as a condition, you have to get that.
Okay.
We have registered without electric compliance certificates, but we'll only do that if we have a quotation from a reputable company that we have worked with and we know what the cost is to fix it.
Okay.
Because otherwise the liability...
And all parties agree, correct?
Because otherwise the liability is on the attorney. If
Yeah.
as a conveyancer you allow registration to go through and you didn't obtain the clearance
Yeah.
certificates, and there ends up being a 50,000 rand
Yeah.
bill for work to be done, that will be on the attorney.
Okay. Okay. And how many parties get involved when there's a bond, when the seller has a bond, the purchaser has a bond? You know, because often there's a misconception where all these attorneys are coming out of the woodwork.
For Waterfall, it's even slightly worse. Normally, you have a transferring attorney that is responsible for the contract and transferring the property.
Who chooses the attorney?
The seller's got
The seller. But the purchaser pays.
Purchaser pays the
Okay.
cost, yes. Bond registration attorney is appointed by the bank, and the purchaser pays those costs.
Okay.
The bond cancellation attorneys are appointed by the current bondholder, as the bank, and the seller pays those costs.
Okay.
But in Waterfall now also you have, remember, that extension of the lease. So there's the landlord's attorneys that are also part of the
So you could
the process.
potentially have 4 sets of attorneys.
4 sets of attorneys, yes.
Right. And what is the, I'm imagining the conveyancer being the central point that has to collate everyone's approvals.
Yes, so technically the transferring attorney will be responsible. It's a good point we need to actually, for agents, if we get the bond cancellation, to request the figures, we need the bond statement. And often we don't get it from the sellers up front, and that delays the process, but that's another conversation.
Okay.
But
You're giving us homework.
and so to expedite the process, the things what could do is to make sure you get the cancellation, the bond account number up front. The transferring attorneys then also request the guarantee. So you request the cancellation figures, which you need to obtain before you can request guarantees from the bond attorneys.
Okay.
So the transferring attorney in the middle needs the bond cancellation figures, then they can request the guarantees. It gets delivered to the transferring
And what is
attorneys.
guarantees for the
It's
benefits
payment
of the
guarantees
public?
from the bank. So it's a bank guarantee that on date of registration,
They will pay
it'll
out.
pay out to the transferring attorney.
Can the bank, once they've issued a guarantee, can they change their mind?
Yes. It doesn't happen often anymore, but the credit is normally valid for 90 days.
Okay.
So if a transfer takes longer than 90 days from the time the guarantees were issued, the banks will run another credit check. And if you've bought a fancy car in the meantime and your credit record is deteriorated, we've had it a couple of times. Not so often that they would cancel it, but they could place it on hold and say they want more financial information to make sure again that the purchaser can still afford.
Every agent's worst fear.
Yes, fair. Yeah, but you always think when you're on prep, when you're in the deeds office, you can relax, but there is still a 5% chance that things could go wrong.
Okay.
And on prep, the money spent in the agency.
Well, the seller as well.
Yeah.
Yeah.
It's actually a lot of parties involved, and everyone has to kind of toe the line, because if anything goes wrong.
Yeah. But the challenges that we have to manage is that you want to expedite the deal. So you want to request cancellation figures, but if you request it and it's an access facility, it means the access facility gets placed on hold, because the bank now needs to issue you a figure.
But wait, okay. So let's say a buyer buys a 6 million rand house and they put down R1 million and 5 million is bond. And on prep, they've now gone and bought that fancy car and the deal gets chucked out. Can the seller and the agent go after that buyer? Because you've literally, at that point, when you know the deal's safe, you're not showing it anymore. You're not. So now that owner has
The seller lost the deal.
valuable time.
Yes.
So can you...
Theoretically, yes, because the suspensive condition for the bond to be approved
Was
has been
met.
met. So it's an unsuspensive offer. If it then
Okay.
lapses as a result of the purchaser's
Okay.
buying
Okay,
habit
that's
and
interesting.
credit record.
Okay.
But the challenge has become, if you ask for the cancellation figures up front, as quick as possible when the deal comes in, you need to actually, as agents, speak to this seller and say, is it an access facility? Do you use it actively and need to get money out of it? Because if so, then we want to wait for the bond to be approved at least before we ask for cancellation figures, because otherwise the facility gets frozen.
Okay.
The bond doesn't get approved. Now you've got the battle to get the facility reactivated at the bank.
Then you're going to have one really upset seller.
Yeah.
And to make it more interesting, if the seller allowed the purchaser to move in as an occupational rent situation. Yeah. But it does happen. And just one question on the occupational rent situation, you know, so a purchaser, they're all happy, they've moved in a month early, and then they start behaving like a tenant rather than a imminent owner. You know, the cracks, the this, the that. What is the what should one tell a purchaser who is moving a little bit earlier for whatever reason that they can expect from the property seller in terms of maintenance or fixing stuff that was visibly there prior to them moving in? Must the seller now start doing all that or not?
The provisions, unfortunately, for occupational rent is not as comprehensive as in a lease. So the maintenance is not normally specified
Okay.
in the detail that it is in a lease, who's responsible for inside and outside and etc.
Okay.
I know you guys for Waterfall also, that clause, the standard Waterfall agreement is not ideal as far as I'm concerned. It doesn't have provision for that the seller will maintain the property and the garden in the same state
Yes.
as it, for instance. You can write that in the special clause.
Okay.
But for the purchaser that moves in, risk passes on transfer. So if anything goes wrong in the property up until date of transfer, there's a lightning strike or an earthquake it would still be the seller's risk until date of transfer. But you accepted the property fits to us as at the date of viewing. The fact that you've now moved in and you become aware of more small cracks and issues that the seller disclosure becomes technical, because if the seller disclosed there are cracks, you didn't say what exactly where in which room, but there are cracks. So for the purchaser, then the owners to prove that this crack is not the crack that was there. How do you prove it? That becomes the technical.
But what if it's a small thing like the hinges on the cupboard are
Squeaky.
loose? No, seriously.
Yeah, I know you speak of experience.
No. It needs to be maintained in the same state that it was in at the date of viewing, when you signed the offer, that state. But how do you prove it? You didn't open that cupboard. You don't know where that was. So it becomes a management of it. That's why I say...
So, moral of the story, don't let someone move in before registration if you can help it.
Yeah, but often, unfortunately, it doesn't happen that way. Yeah.
I know the attorneys hate us when we do it.
It might be something to you, and I never thought of it, but to do another pre-inspection, a pre-occupation inspection, to say before you move in and you go lie in your bed at night and you stare up at the ceiling and see the hairline crack in the ceiling for the first time. Maybe do a pre-occupation inspection where you
But who
again
pays
as
for
the
that pre-occupation inspection?
extra work for the agent.
Extra work for the agent is fine, but it always has to be a third party, because if it is not, then the agent becomes, you purposely didn't notice.
But even if you just get the purchaser to do another viewing of the property before they move in, so that, in other words, you say, there we draw the line. Before you took occupation, you've again verified that it is in the same state as it was.
Okay.
That might be a way to...
But then they might start nitpicking.
Yeah. Well, it's a balancing game, because you represent all parties, remember. So, yeah, okay.
I would say the conveyancing process, speed is an important factor, if not the most important factor.
Yeah.
But there's so many emotions that you have to manage in the process. You know, it's a big asset, it's a big debt, it's family history, it's memories, so all of those things come into play. And then often financial stress, you often get a seller that throws his toys over, why must I pay the council 3 months in advance for my rates?
Yeah.
We fully understand your frustration, but that's unfortunately the law.
And also
and the way
getting
it
that
is.
money back from council is another...
serious frustration,
Yeah.
But the point is, if you can't do anything about it, you have to deal with it.
Yeah.
But you've got the conflicting occupation dates for buyers and sellers. I want to move in because I want to start renovating before registration. It's all those expectations that has to be managed. And that's where the difference comes in with a good agent and a bad agent. A good agent will...
Prepare them for all that. Yeah. And we're not in the Cape yet, where there's beetle certificates and plumbing certificates to worry about.
Stories about
And so, yeah,
we
so
have
a
obviously
lot to be
done-
grateful for. Yeah.
Yeah.
Any other tips or tidbits that, suggestions or
Pick a good agent.
okay,
that
and a
knows
good
the area
conveyancer.
and- Yeah, I think for Waterfall, bottom line is the lease is secure. It is as good security as a title deed for all practical purposes, I think.
Yeah.
In the beginning, the first couple of years, we had lots of questions on it, but of late, I can't really think that I've had
I think they ask us before.
No,
they
you're
get
lucky.
it.
I was going to say, we still have a lot of questions.
Yeah, we do, where they just
Yeah.
concerned. But I mean, it does make a lot of sense. The properties in Waterfall, village side being cheaper, 6 million rand start basically your average. It's a lot of money. So
Yeah.
if you're going to be spending that type of money, I also want to make sure that
Yeah.
And 3% extension fee plus the 0.5% no VAT.
yeah,
Compared to transfer duty on the Waterfall sales, it's pretty much 13%,
Yeah.
12-13% average.
But just to know that it also includes all the apartments, guys. The polo fields, the munyakas, that's also Waterfall.
Ellipse.
Yeah, it's sectional title, but it's still a
Still the
material
99,
And
yeah.
section.
you've got the retirement, which is slightly different. The costs are
The
even
retirement's
higher.
completely different.
Yeah.
Yeah.
So the costs are a lot higher.
It is higher, but compared to life rights, it's comparable. It's not.
Okay.
It's not worse than what you would pay for.
Yeah, because a lot of the
Life
other
rights.
estates, it's life right and then goes back to the, so that's, yeah, okay. All right, well, lots to think about. And of course, I would definitely say, because we're speaking conveyancing for the sellers, please don't choose your cousin's best friend twice removed who knows someone who once did a deal, because we've seen so many deals go wrong because it's actually a legal person that you know and doesn't do any conveyancing specifically, if not in Waterfall, to navigate through all the requirements. You actually need to choose the right conveyancer because, first of all, you need to choose a conveyancer, not just someone who knows a conveyancer. Yeah.
To make the right decision.
I think the important bit there is that for the seller, don't get strong-armed by a purchaser that tries to push for his own conveyancer.
Yeah.
Although the purchaser pays the cost, understandably.
We
but
don't
for-
really get that, though. I must be honest with you.
Because the one that needs protection, obviously the agents as well as the seller. It's your
I
proceeds
say
and your
straight,
property.
I've had it asked a few times and I just say straight, that is not your decision. It's the seller's decision. It's the law. So,
But it can happen to anyone. It happened to me in a previous house that we sold. And being an agent, I should know better. But I got strong-armed by the purchaser to use their own conveyancer. It was a disaster. It was absolutely horrific.
If you say, if at least you make sure it's a conveyancer and not just a...
Yeah, at least.
criminal
Because we've
or
had that
litigation
situation in
attorney.
Blue Valley where the
litigation.
attorney that was actually a litigation attorney. So all he did the entire time was try to get the deal to fall apart.
To
So there's litigation. And the seller just did not realize this until the end, and it was a complete disaster. It took us a lot of effort to actually save this deal for all parties because it was a disaster. It was an absolute disaster.
But although we, as conveyancers, we are appointed by the seller, our interest is to get the deal through. We look after
Yeah.
the seller, we look after the agent, and we look
And
after
that should
the
be
purchaser.
all the parties. If everyone signed this contract, it is assumed that everyone's interest is the deal to go through, not to fall apart and to end up litigating.
No.
Yeah. So as long as everyone's working in the same direction and doing their part, then it's all good. Well, thanks very much. On National Women's Day, we're all working. So,
At
but
least
it's
I'm not a
been very
woman.
interesting.
I'm not
So
supposed
happy.
to be arrested.
Yeah.
So happy
Yeah, there you
Women's
go.
Day. Happy Women's Day to all the women.
Okay.
You're probably going to only see this.
In a week's time.
Yeah.
Or whenever.
But
Okay,
happy-
thanks a lot. Okay. Thanks, guys.
you.
Thank you.
We good?